I'm not late. I'm not late. Let's drop that idea right now, okay? Um I guess I'm a little late. Okay, I needed some water. Okay. Now that I just ran up the stairs, Michael, still no Gary Gordon video. Are you pulling my tail? I've got a surprise for you, but you're going to have to wait. Okay. Let's just jump right into some of the smaller news. I'll get into the SoFi stuff. Gosh, I got to catch my breath. I'm so out of freaking shape. So this is a small piece of news. However, I still want to cover it. Robinhood is now available to all customers in the United Kingdom. Okay. So before they were just beta testing it, allowing some people to come on. But now they're allowing anyone who wants to sign on. They can get no fee. 2.25% FDIC insurance, 5% on their uninvested cash, all sorts of exciting things. And considering the fact that there is no payment for order flow, some people are starting to question the possibility that they can actually break into this market. I also saw this tweet right here I wanted to bring up. Shout out to Six Sigma Capital, who says the US population is very different when it comes to investing. Only 15% invest in stocks versus 50% in the United States. Also, they tend to be more conservative, preferring property and savings accounts than stocks. Payment for order flow is also not available. We'll see how this ends up. Will be interesting. So, one thing I wanted to add this because Robinhood is a very special tool. And it reminds me a lot whenever I saw this comment. And now I'm not saying that the way that I'm saying is going to pan out, but there's also another aspect to this conversation that needs to be brought up. And that's what happened with Nubank, right? At the time that Nubank started to enter Mexico, there was a bunch of comments that said, well, they're not going to be able to successfully do what they did in Brazil because there's such a high population of people who are just simply unbanked, keeping their cash under their mattress. And so they're not going to actually break into that market because, well, it's just not the way that people tend to, store their cash. Well, people really forget because it's been a while, but that was very similar in Brazil as well. Now, that percentage of people who now, keep their cash digitally has completely changed. Now, the point I'm trying to make here is that Nubank was a reason for that demographic change, right? That before that, whenever you're just looking at the incumbent slow players that didn't offer a great service, well, Brazil would have probably potentially still held a very high unbanked population. Now, they're going to change the demographic in Mexico as well. And there might even be an opportunity for Robinhood to change that percentage of people who are investing in, equities and these sorts of things, because they actually have the tools needed to be able to quickly make bets and also, potentially change their investing behavior. So I would argue the fact, and now I'm not saying that this is going to be the case, but that there is a possibility that the percentage of people is based on the tools that they are given. Okay, let's go on just very quickly. I gotta take some more water. Turk says, I entered a SoFi position today, $6.94. I think, going forward, that will look like a very, very nice position. But it looks good for my portfolio, at least. Maybe I should state that. Okay. Going on, though, there was another small piece of news. We're going to do about 3 small pieces of news. Then I'll jump into the SoFi thing to let me, finish off the night in an exciting manner. But that being said, Shift4, for all the Shift4 fans out there, partnered with another very, very exciting company in Europe. So they only recently got into Europe, right, with their expansion from their acquisition of, what was it? Why am I not Appetite? I'll remember it in a second. Anyway, Shift4 ended up buying their way into the European markets, and now they are starting to go towards very, very interesting markets, which Shift4 is known to do. People will know that they've powered a lot of European businesses that have to do with, camera enabled commerce, or those palm reading things that Amazon is doing. Those are also powered by Shift4. Very interesting styles of commerce that Shift4 likes to take on the complex problems. In this case, it's another very interesting play, electric car charging. So they are going to be going with Atlanti, and where is it? There should be some statistic in here that I read. Where is it? Come on. Oh yeah, so they're going to provide the card present payment solutions to Atlanti's EV charging stations across Southern Europe. So right now they're in France, Italy, Spain, and Portugal mainly. Okay, they are broken into a bunch of other places as well, but it's very, very small numbers. I have a map to show you guys if you're interested in seeing it. But yeah, I thought it was such a cool, this is their charging station network. They have about 1,800 right now. This is, picture a little Europe right here, a little Southern Europe. Okay. So you can see that they have a large presence in Italy. They got into France, but now they want to get into Spain and Portugal, definitely being a big one. Like, Lisbon over there has 264 stations. They're going to want to expand there. They're not there yet. They will be by the second half of 2024. Now, I was looking up Atlanti just a little bit more. I thought it was interesting, just for the people who care. They want to get to 5,000 chargers. Right now, they're at 1,800. They want to get to 5,000 chargers by 2025. Long-term goal of 35,000 chargers by 2030. Whether or not they get there, that's up to them. But knowing that Shift4 is building these very young partnerships that continue to expand out just means a heck of a lot more total payment volume for them going forward. Now, let's go on to SoFi. Woo! Now, this is extremely exciting in my opinion. Let me see if I can bring this up. So this is what came across my screen on Seeking Alpha. It said, Galileo expands buy now, pay later solution to include post-purchase options for credit and debit. Now, at first, I didn't understand what that meant. Post-purchase for buy now, pay later? Isn't that the, like what does that mean? That sounds like some sort of small loan that they're giving you. And essentially, that's 100% what it is. I was completely right. Essentially, what they're now going to offer their clients, and by whenever I mean clients, I don't mean SoFi clients, I mean Galileo clients, the 145 million accounts, right, that deal almost exclusively in the debit card business line. So let's say Robinhood, for example, wants to offer this as being one of the clients, or Chime being one of the services that want to offer this for their debit cards. So you can make up to 5 separate purchases with your debit card. Okay, you can go around, make all your different purchases. Now, you need the money to be in your account. Galileo has now set up the ability to go in and say, hey, you can now select 5 transactions or less and say, Robinhood, I need this money back right now so I can pay my bills. But if we can set up installments to pay that back at an interest rate that you and I, both agree on, then we can pay this money back over time. Now, it's up to the actual, clients or like the Robinhoods, the Chimes, the financial institutions or fintechs to actually enable this, right? But it is interesting to know that you can essentially have small cash loans available at all the fintechs and financial institutions that Galileo now offers. It's not a super big product in my opinion, but it is available to the businesses that do want to offer those things. Kind of like a cash advance, but with the purchases that you've already made. Now, what's different than just a credit card, right? Credit cards essentially are just putting everything that you buy on a loan for then you to pay it back on your whim. Well, essentially, no hidden fees, no interest rates. A loan that you end up coming to an exact interest rate before the purchase has actually been made, right? So there's no end up, sneaky fees or anything like this. Essentially, you guys should know what buy now, pay later is. Affirm, Klarna, Afterpay. It's not really a business that hasn't been heard of. Now, the interesting thing that I find with these larger and larger offerings in buy now, pay later, see, Galileo will allow up to 4 different installments. Anything past that requires a different lending regulation. Okay. So it depends on the business on which they want to continuously, advance in this product and offer, 12 different installment payments. But my problem is that the Affirms, the Klarnas, the Afterpays, they're going to have to find their own clients, pay for customer acquisition costs, try to acquire these clients just to offer them a product that over time, slowly, is starting to be offered by more and more financial institutions. And now, through the power of just APIs, SoFi can enable 145 million customers this, potential new product, and available at every single retailer that accepts Visa or MasterCard. So if you accept, card payments through debit or credit, you don't necessarily need a partnership with Affirm. Now you could say, Affirm Card and these sorts of things are also in that similar vein, but they have to build that out. They have to find the customers, right? Affirm does not have the customer count size like nearly does, Galileo or these other banks that are starting to enable these processes. So I am a big, big fan of Affirm's underwriting and the company that, very, very hard to bet against Max Levchin, the CEO of Affirm. He started PayPal, okay? He was employee numero uno of the PayPal mafia. It wasn't Elon Musk. It was Max Levchin. To bet against him would be something that I definitely don't want to do, but I find that this environment is getting so much harder for the buy now, pay later specific companies rather than it is for the PayPals of the world that are just enabling buy now, pay later, or the SoFis of the world who are offering these services to every single client that they are offering their current debit card solution to. Now, this goes across normal lending things or normal lending solutions as well, but it's just another notch on their belt to offer their customers exactly what they want. I think this is extremely interesting. It'll be exciting to see if Robinhood or Chime or any of these ones, like, for example, Dave does a lot of this, right? Like these cash advance style of products, goes after more of the lower income individuals. So to see Dave start to offer these products where you can then take your debit card, purchases and then end up getting a loan for them afterwards, if they start to offer that, 100% Galileo is the one that offered them that solution. Pretty interesting. Classic said, I saw SoFi's name on the NVIDIA conference schedule. I actually didn't. That'd be really interesting. I saw PayPal's name. I didn't see SoFi's name. Let's see if there's any other questions. Jeremy's loving SoFi at this price. I just saw that actually. SoFi and NVIDIA, right? Yeah, if you guys haven't seen the NVIDIA GTC, like the original or the opening thing by Jensen Huang, you guys have to check that out. I mean, it's the best insight to what the future is going to look like, in my opinion. And I've never been scared of the future, but and obviously it's a conference, right? So it's always pushed to the most extreme rather than how fast it's actually going to come out. But yeah, we are living in the future that the history or the sort of fictional movies said we would be. It's unbelievable. Sorry, let me read this comment. Sagig says, is this going to increase the risk for SoFi? Going back to the buy now, pay later small loans. Not one bit, not even an inch. All we're offering is the APIs to end up setting up this process. It's the companies that end up offering these loans. The risk goes directly to them. So they have to figure that out. They have to do their own disclosures, all the legal considerations, all of that. We're just offering the technical ability to set up this, manage the payments coming back in, actually offering the loan, setting up all that stuff. So it's only the technology. It's not actually the lending. Same thing for like Technisys or something, I guess. Just because we manage a bank's background doesn't necessarily mean that we take on their capital risks. I wonder what, Harry, I want you to expand on this. Buy now, pay later is hard to track spending. Why? You know when it's hard to track buy now, pay later spending is whenever you have a bank somewhere and you have 3 different buy now, pay later solutions somewhere else, right? But essentially, the idea of buy now, pay later is no different than any other credit product, like a credit card, for example. So if all of your brokerage spending is at Robinhood, all your cash is at Robinhood, and now they're starting to offer credit solutions on the other end, what makes that any different than just a simple financial institution? Of course, you can track your payment schedule. So yeah, SoFi is not issuing loans. They're issuing the technology to issue loans. Amex offers this. It's convenient occasionally with large purchases, but they do charge a small 1 to 3% depending on the term that you select. Still less than SoFi savings though. Josh, are you talking about the buy now pay later post purchase? Because to me, it never made any sense from they're offering it for both debit and credit, but to me, it never made sense for the credit card. Like, I don't know if there are people who use credit. I mean, I'm sure there is. I just have never used a credit card this way, so it's hard for me to imagine using a credit card as a way of storing balance. Uh, Obviously, people do it. Like I see SoFi's credit card balances. I see Amex, Capital One's. People do it, but it's just hard for me to imagine. I only use it simply so then I can go, me, I see it as this is just cash back. I'm going to pay it back. It's, auto pay is set up. But I could see how people use it just to defer payments because, they know that they have 30 days before they have to pay it back. And so then they can wait to get paid and then pay it off whenever they get paid. That makes sense to me. But for people to use a credit card to then say, oh, it's going to cost me this much interest and I can hold on to it for 6 months. It's like, what the heck are you talking about? It's going to be what do you need that much that you're willing to pay? Like, I don't know, 6 months on a 21 or 22% just for easy math, like 11% interest over 6 months. Like, who does that? It's also the same reason why people with money don't buy their house in one purchase, even if they could, due to the net present value of money. I mean, it's a little different whenever you're talking about small four installments over a small period of time, like 6 weeks, 2 months, something like this, versus a 30-year mortgage. But I get what you're I get what you're going after. Or people who stay poor. Yeah, I mean, I won't say it as bad as that. I think that the real thing, and I saw this from Caleb Hammer. Some people just truly do not understand compounding interest at all, like, or even simple interest. And that's not because people are dumber or something like this. It's just that money's not their thing. And me growing up with a full-on fascination with money, simple mathematics. I'm not like some, big math guy, but I've always understood simple interest and compounding interest as it pertains to investing and having money. I mean, I'm sure literally everyone here does. But the people who don't, it's like as if they speak a different language. Like, I can't understand why you keep a balance on your credit card, especially some people do it and they have money in their checking account. Um, so what's the Galileo benefit to that? Just eyes on their other product ability? Well, no, we're going to be charging for those transactions. So usually, and especially whenever you're talking about ancillary products that a company is going to sell, they're usually at higher margins. That's for one. If we're facilitating loan products, which means Robinhood or Chime, probably Dave. Like, I'm going to look out for Dave to see if they put this out over the next 6 to 9 months or whatever. As they start to roll out these products, they could be potentially making, who knows, 14 to 30 something percent interest on these post purchase products. You think SoFi is taking a decimal of a percent, or sorry, a decimal of a cent to make that transaction flow? Of course not. We're going to take a pretty high cut for those transactions. Now, I'm not talking in full dollar values. Like, you have to remember that the way payment processors work is that you're lucky to get 2 cents out of a transaction because, but it's just sheer volume. It's just a ton of volume that flows through. I guess not lucky to get 2 cents. Maybe I should have said $2 or something like this. But essentially, do that enough times, you're going to end up walking away with pretty healthy margins. And so, do I think that eventually this is going to be, incremental to their overall margins? Maybe not immediately, but all of these new product additions, as I believe that, products are still going more digital than ever. And also, you also have to factor in the fact that a lot of the larger financial institutions have needs for more and more products that potentially Galileo needs to offer. And so the more different abilities that we have, obviously, the potential more revenue that they can make on a per customer basis, which has been the fact, by the way. If you guys look up, hey, the course members will know because they have access to the spreadsheets, but on a per account basis at Galileo, the average revenue per account has been climbing, which means not only are we trying to get more and more accounts, not only do we try to get, larger financial institutions and more revenue overall, but on a per account basis, that revenue is actually climbing, which means potentially on a per account basis, this could be higher margins if for example, we're keeping the cost down, but also it could mean that the relationships that we currently have, they're taking more and more products. We're almost cross-selling on the tech platform side, which is really interesting. Time will tell. Zero debt here, coming up on 4 years in November. I can't say the same. I just took on the most debt I've ever taken on. Bought this house. But people call that smart debt, so I feel fine. I'm just kidding. It's definitely scary. Since SoFi is the processor and issues credit cards, we're the bank. Why isn't this figured into a major positive? Jay, what are you talking about? And I don't think SoFi is the processor for our credit cards. Buy now, pay later, post process. Any transaction over 100, you can combine with others and select a term. For example, we went to Hawaii, $10,000 on the card, put on for 6 months, paid Amex $200, got four. What the heck? Let me read this again. Buy now, pay later, post purchase. Any transaction over $100, you can combine with others and select a term. Yeah. For example, we went to Hawaii, put $10,000 on their credit card, put on for 6 months, paid Amex $200 and got 460 from SoFi. Oh, so you're talking about the 460 from the interest accruing in your SoFi checking and savings. Is that what you're talking about? Or are you talking about the cashback? Because the cashback wouldn't have been that high on 10K, and you'd also have to wait a whole year to get 460. Or are you talking about a combination of all of it? Because it kind of doesn't make sense. I get what you're saying on the idea of potentially parking that money back into your account. But yeah. They make the margins in basis points, correct? I mean, if you can point out a margin that is not basis points, then yeah. If you're talking about the margin on the TPV that Galileo takes, then yes, it's not even a full percent basis. But if you're saying Galileo's margins are in just basis points. No, it's like 30+%. Tanner, double down on your lump sum mortgage and double up payments, pay off that house in 12 and a half years. Worth it? You don't know my interest rate. I'm not doubling up on the payments. I'm taking it slow and steady. $10,000 credit card with 17% interest too. Yeah, but he's talking about the post purchase. So he's getting it off of the credit card balance and putting it into essentially buy now, pay later. Okay. David says, Tanner, we need you to defend SoFi from today's CNBC sell rating. Yeah, so I watched that. Let me see if I can bring that up. Someone sent that to me really, really recently. Where is it? Here it is. Okay. I'll bring it up. I'll lose my my watch revenue or whatever. Okay, I gotta wait 15 seconds to get through their ads. I don't have a CNBC account. Are you kidding? um, get out of debt. Don't look at everything in numbers. I disagree. I like numbers. Numbers make sense. People lie. Numbers don't lie. I don't actually believe in the rush to get out of debt, because that money that I'm spending to double up my payments, it's also quality of life. Like I can, feed my family, buy new cool things, buy a new camera. The debt's all not that scary. Heard SoFi is 3% cash back on their card. Did I miss something? Well, they have 3% cash back on their card for the first 12 months if you signed up with SoFi Plus. But yeah. Okay. I think this is the CNBC thing that people are talking about. I'll watch this for you, and then you guys can see how just one-dimensional this is. Oh, sorry.
Shares are down double digits over the past month, nearly 30% since the start of the year. Speaking of 30%, that's the percentage of both the buy and sell ratings for the stock on Wall Street. Scott, analysts may be split on SoFi. What's your take?
I'm not sold. This is a sell. It's a purely online financial services company. Nobody has made that work. And despite the decrease in price, it's still expensive. The price to book is 1.3, which is more than Bank of America and double what Citi is going for.
Okay, let's just start off there. Just comparing it to the largest incumbent banks doesn't mean that SoFi is overvalued. Okay, look at Tesla, for example, versus any car manufacturer. Why are you not basing it on growth rates? Like, what is SoFi just to be looked at as the most, just the biggest bank ever that's making 3 to 5% revenue growths? And I don't think so.
Customer acquisition costs in this space are enormous.
Oh, did it freeze? Why is it freezing?
And there's nothing that SoFi can do that the big banks can't do. The company is also paying 10% of its market cap for that NFL stadium naming rights deal in Southern California. Yes, it's already down 30% year to date, 17% in the last 30 days, but that does not mean it cannot go lower.
Well, appreciate that. Yeah, I think that it's been pretty proven by now that SoFi Stadium has been a slamming success. You'll notice that because they've done another deal already, SoFi Center. That'll be coming out January 2025. That's with the TGL Golf Group. So this has been one of the best ways that SoFi has been able to bring on new members onto the platform. I think it was on maybe it was a public video or one of the private videos I've done, but we broke down the number of accounts that SoFi would actually need to bring on in order to pay off the fees associated with the SoFi Stadium, like cost for the naming rights, how many people we need to bring on. They are so ahead of that, coming specifically from SoFi Stadium based on, things like the Taylor Swift concert that ended up blowing away, member growth rates and everything. It really does lower customer acquisition cost, not the other way around, right? The idea that you can blow off, SoFi. Oh, wait, guys, anyway, the idea that you can just blow off SoFi's advantages by saying there's nothing that we can't do or nothing that the banks can do that SoFi can't do doesn't make any freaking sense to me. If you guys can do all that, why are we taking all your deposits? Why aren't you offering your customers an appropriate APY? Well, it's because, we want to make those margins. Well, your margin is my opportunity. We'll take we'll take that margin difference, right? And that's why SoFi, from a member perspective, is growing so much faster. Now, I want to end this right now because I don't know if you guys had seen, potentially you did. It's 9:00. A new video just released on the channel. Gary Gordon might be there. Who knows? So why don't you just leave this? Go check out that new video. I'm going to post it on X right now. I had another great conversation with Gary Gordon, sell-side analyst for SoFi. And I don't think I was as nice to him this time. But honestly, he is such a great guy. I hope to have him on again. We talked for like 40 minutes, even after the thing. He's a true gem. So I just don't fully agree with all the things he said. Here, I'll send you guys a link in the chat. There you go. You have to remember, he is simply like he says it in the video. He's a value investor, right? I'm a growth investor. We're never going to meet eye to eye on how to value companies, but we can try. There you go, Michael. I got you, friend. So go check it out. Go, 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 go. I want to see the freaking views go down. And be nice to him this time. He's got feelings. All right. See you later, y'all.